Okay, so 2018, predicting the markets using the simplest strategy. I think as traders, it's our job to predict the markets. And the whole point of technical analysis, technical trading, is that the markets are there to be measured and anticipated. And we've got specific chart patterns and parameters that will help us really look at the markets and predict these moves. That's why when we're in the live trading room, I'm recording it, that's why when we're in the live trading room, that we're looking at intraday levels all the time. All I'm doing for looking at 2018 to a large extent is just expanding that and scaling that up, but you'll see the differences as we pick through the charts and start to plot our way through. Okay, but for me, this is what trading is all about. It's not about actually placing the trade. It's about doing the work that goes into trading to really examine where the markets are and where they might end up. Most days I can predict the market pretty much within a few pips, because I've got a fixed way of looking at the markets, and the markets behave the same way most of the time. And on the occasions where they don't work to my formula, that's fine, as long as they work to my formula more often than not. So I'm just repeating what I do every day and expecting the same results. That's the bottom line. All right, disclaimer, don't do this. Rather than give you a whole long drawn out disclaimer about you may lose more money than you invested, etc., etc., I thought I'd just do a short disclaimer. Don't do it. That way you can't sue me. Right, next slide. So where are we now? Let's just have it before we go to. I've only got 5 slides. So before we go on to looking at the prospects for next year, let's just think about where we are. We've got the longest bull market in history. Should we expect a crash? I'll answer that later on when we get to the charts in a few minutes. But the point is, the central banks must reverse the money flow. The European Central Bank is scheduled to stop quantitative easing in September of this year. And the Fed have already said that they will rebalance the balance sheet to the tune of 450 billion. So this is significant. These are major events in the market that could really, that the market's got to digest, and could give us lots of opportunities for trading in the coming weeks and months. So here we are with rates in the US gone from practically 0 to 1.5%. So we had 4 rate hike increases, which has already slowed money supply. Here in the UK, we've had a rate rise, and the Bank of Japan has been the most aggressive quantitative easer in history, and they have had to change what they're doing, because you can't just keep printing money at that level. So there have been 13 rate cycles in the US since 1945, and 10 out of those 13 have ended in recession. So the probability of this market reversing is there in the history books. If nothing else, there is a high probability that this market could reverse at some stage. Now, last year we saw, on several occasions, particularly in the second half of the year, we saw some veteran traders predicting reversals of the market. Let me just take a sip of drink. Hang on. Suggesting that this market was way too hot and we were about to get a correction. Well, those corrections, any dip we've had, have all been bought. So one of the things I'll be talking about in a few minutes is the fact that if we get any dips in these markets, then I'm just going to keep buying them until they stop working. But when is a market reversed? When has the market had enough? Well, we're going to look at that and talk about that in a few minutes. So consumer sovereign debt is at crazy levels, $20 trillion in the US. Almost at the back end of every year, the US has to get agreement in Congress to raise the debt ceiling because the debt levels are just not contained. They're not shrinking. So, but the Fed have got to address this and rebalance the books, hence the 450 billion rebalancing. So that should create a lot of opportunity for us. And should give us a lot of opportunities. Right, next slide. I've only got 2 more slides left, and we're going to get on to charts. So bellwethers. My 2018 strategy, don't fight the trend, would be on high alert for reversals. So the bellwethers, for my money, what the Nasdaq does, the rest follow. That goes for the Nikkei, that goes for the Chinese market, the Australian market, the UK market, whatever. Nasdaq has always traditionally been the leading indicator of the strength of the global economy. You know, the US technology market tends to tell you what is likely to happen. I think these days, with the shift in power to Asia, you know, we have to acknowledge that. And so one of the things I've been looking at is monitoring the strength of the Nikkei. Nikkei, Japanese economy, had an incredible bumpy ride. We went through something like 13 finance directors, chancellors of the exchequer in, I don't know how many, you know, in a handful of years. So they really had a lot of problems. But Abenomics have done well. So the key watch list I've got there is commodities. These have been very depressed over quite a while. We've seen a big spring in the step of oil, bust through 60, currently just tested 62. Also been examining other commodities like the grains. Copper's had a good run, but there's some other, gold and silver have been particularly good. Silver's had a great reversal. So we'll be looking at those in a few minutes. As far as sectors are concerned, if you're not trading stocks, then you should be. At some stage in the future, if you really want to take control of your savings and your pension, then I would suggest you take this knowledge and start to consider actively trading your own SIP, because the sort of levels you can get in normal returns will, in theory, be a lot less than what you could do. So the best way to anticipate the market is, at the moment, is keep buying pullbacks until they stop working. And I'll talk about how to tell when they're not working. Well, apart from the fact that your account's going to show you, your account's going to tell you if you're buying pullbacks and they're not working pretty quick. So be clear about what to expect if you see a reversal and how to react. And how do bear markets actually operate? You know, I've been through at least 3 bear markets. Early 90s, well, the 87 crash, the early 90s was very bearish. Then we had the tech bubble that burst in February 2000. Then we had the subprime crash in 07, 08. And yeah, and then we're talking about, you know, this rate cycle we're in now and what that might give us. Okay, so right, that's the end of the slides. Let's get on to the markets. Now, before we talk about anything, I just want to do a quick recap on what happened today. The DAX was I missed it. I don't often miss trades these days. I did miss this. This was the London range, or the high of the London range here at 77, and that's the only pullback we got at 9:30. I was greedy. I wanted a deeper pullback. I was looking for at least 50, 60. We didn't get it. And then at the peak, we were 13,210. So I will make sure I look at the London range as well, because this German range was terrible. You get one big pounce to the upside from 23 to 44. You get hardly any pullback, and the titchiest, narrowest range pullback ever. Another push into the London Open, and you only get the slightest pullback in 9:30. Before that, pull back to 160. Let's look at the Dow. The Dow is very similar, just straight out of the box, no fade. Yeah, within half an hour, you get a push into almost 21 or 2100. And here we are, 25 pips underneath. So no fade. So I was suggesting 0510 will be a good option to get in. Well, no chance at the moment. Absolutely no chance. But luckily, the Euro Yen it's a much slower, thinner market, and that did give us the pullbacks. I bought about 45, 46. We saw a low of about 40, and we saw a high of 635. So if you managed to catch the absolute high, it was just under about 90 pips. Again, with no real, well, yeah, we did get a fade. We pushed up into 8:30, pulled back into 9 o'clock. We were still hovering around there at 9:20, but finally got going later on. I did actually short this euro, just very quickly before we get on to the big picture. I did short this area here. I shorted here and got stopped out. I did short here again and made my money up on that move down there. If you look at the 15-minute chart, you can see we broke through to 90. This to me is a sell signal any day of the week. High MACD, sell signal, lower closes underneath the previous day's highs. Nice sell signal, and it just did a stop run and took me out. So at least I cleared my debt and just built a little bit of a buffer in there, a few quid in there just to get that back. Okay, so that's the market today. Let's non-farm payroll tomorrow. If I do trade, I'll be trading very, very easily. Right, big picture. Let's kill this chart and call up the weekly. Now, so what's going to happen in 2018? Let me show you what happened with this market, the Dow in 2017. So those of you who know me know that I fib everything. If it moves, fib it. So what do? I fib the previous year. And if you look at what happened in 2016, that plotted the way for the move for 2017. So we saw a very shallow, as with this January, we're pushing up very, very early on. We pushed all the way up into February last year. And we were weak into March and April. We got another wave up into August. Really shallow pullbacks. I mean, they are quite shallow bars, really, which is a sign that it's very bullish. If you get a lot of big bars and chopping and changing, it's a sign that there's just a lot of volatility and you're sideways. But this was very shallow pullbacks, followed by fairly gentle moves the upside, until you get that big push up in late November. So if I take that, if you look at the fib levels, the last year played to the fib levels. So I drag this chart down and apply the fibs to 2017. You can see that we could potentially get up to 26,320. which is not, given the sort of momentum we've got, this is not that far away. So, however, if we were to fail any point around here, any point in this zone, and put a sell signal in, and we'll talk about sell signals in a minute, we fail anywhere in that zone and start closing under 25,000, particularly 24,895, then I would suggest you could come all the way down to 22,750 and still be in the trend. That's how strong this market is. You could drop 2,000 to 3,000 pips and still be within this trend. If I now copy this and tuck it up, you can see we broke up. We didn't even retest the trend line back in November. We just kept going. So it's a real breakaway trade. Another trick is, my favorite setup is a three-wave reversal pattern. So there is the upside of that trend. And if I copy that, then you'll see we could come all the way down to 24.5 and still be in that channel. So that's what I'm looking for. I'm looking to see how we operate in this zone and looking to see if we get a lower close. So a good sell signal to me is, let me think of a good, let's go to a Forex market and look at a good sell signal. Let's look at this. Well, this is, I'm going to show you a buy signal. Instead of showing a sell signal, I'm going to show you a buy signal. So this is the weekly chart of the pound Aussie dollar. A good buy signal is here. Now, not because it's a hammer-like bar, it's a pin bar. The reason why that's a good buy signal is because you've got a new low in that little range, and then you immediately close above. So on March 13, week beginning March 13, it was still bearish, and then the week beginning March the 20th, we immediately engulfed that. So that was a buy signal. That week was a buy signal. The pullback, notice how we retest the top of this sell signal. We retest 161.80 and run to 176.80. So that's 1,500 pips on the back of that sell signal, buy signal. Let's look at a sell signal. Let's use this. We have a sell signal here. So again, we got a new high in the range. This bar here was a new high, immediately followed by an engulfing bar immediately on the week beginning 30th of May 16, and we subsequently, once we pull back to 199, we drop from 199 to ultimately to 144. So it's a huge drop, huge, on the back of that sell signal. Okay, so candle patterns are one significant way of telling whether you are in a period of transition, if you've reversed or not. So you can see that from the September 14 low, this is a very significant point. What do I think is going to happen? I think this will break down. I think that is a massive sell signal here. So new high in the range, close below, and there you get a sell signal. Okay, and so I would, if I'm going to short this, I would still look for any push back into 175. Right, let's come away from that one. Let's just look at the DAX now. Seeing as we trade the DAX a lot in the trading room, let me pull back and talk about this one. There's the buy signal, new low in the range, close above next bar. So that pullback in 16th of Feb 16 right onto the 200-day moving average at 91.27 was a great opportunity, and you get a lovely little retest of the trend line. So you got a real sort of structure here, real structural change to the chart here at this apex, and then so there we are charging up. So we've now had this little run up here. We get a sell signal. We sell into that bar, halfway up the bar at 13,325 area roughly. And here we are just pushing up. So if we close up here, we need to buy a pullback to roughly 13,000. Anything lower will be a gift, and then see if we can get back to those highs. So that's the chart pattern. Let's look at the fibs. So if we now fib, let's just put the fibs back on 2016 to make my point. And so in 2017, we had a buy signal here on the first week of Jan, pulled back in the second week of third, all of January and early Feb. We kept pulling back into this bar here, into this buy signal. And then finally we broke out. And finally we closed above it here, week beginning 13th of Feb. Got the run. Started topping out here, pulled back. So we had, there's wave 1, this wave 2, this wave 3, this wave 4. So if we're in a 5-wave move, we are still in the process of getting wave 5. So close above here, we need to buy a pullback and then potentially see something into this range. But let's fib 2017 now, take that off and fib 17. And what do we get? We get a key fib level at 32, 13,032. So close above here this week, i.e. tomorrow. Buy 13,030 next week. And we could see 13,540 if we hold that and close above. Then I suggest we can get to 14.1. If we can't, if we fail here, then I think we can roll over. So the failure, the key point is going to be, for me, is going to be here, 13,540. If we close above that, I think we're going here to 14,100. If we close underneath that, I suggest we could at least come and see 12,750, if not 12.5. So that is the potential there. That's the decision point. If we pull back, then I think we can go. If we fail here, then I think we can roll over and roll down. So we're not far off 13.5 already. That's where I think, that's where the decision is going to be. That's where the market's going to tell us if it wants to go higher. Trend lines, that's the key. Let me draw that a little bit neater. Take some of this off now. Let's take this off. Trend line is there. So a typical bullish move would be to 1, 2, 3, 4, 5. So if we drift but hold here, then I think we can bust up. Otherwise, I think we maybe we won't even bother this trend and we'll just continue up. So I'm short-term bullish, long-term bearish. I think the second half of the year could be the real crucial point. Chart patterns, I'm a big fan of chart patterns, so let's have a look. That is a beautiful chart pattern. Look at that apex. Could end up drifting around this apex for a while, and then we get the decision. I'm going to draw this one. That's a really nice chart pattern. That's the structure of the DAX on the weekly chart. If you see similar patterns, so look at previous patterns. That was a three-wave reversal on the low of Feb 16. Followed by that structural failure here, and then we break out August 16, pull back November 16, and then run. So great structure here, leading to a nice tight apex here, and whichever way we bust out of that could be dramatic. So that's the DAX. Quickly do the same with the Dow. We are really busting up. It's so bullish, it's difficult to get a handle on the chart pattern. In fact, I'm not even going to bother. I'm just going to turn that off. Look at the 200-day moving average. The 200-day. Did you ever see the 200-day moving average so far away? That 200-day moving average is 18,640, and we are currently 25,000. That's huge. If you look at the relationship of the 200-day moving average over this period, you can see back here in 11, we were holding it. So these chart patterns are fantastic. That's the long-term trend. So when we dropped under here in 16, we very quickly got back. We really pulled up here in December 16 and did a massive breakout. So anyway, the point is we're really far away from the 200-day moving average. So that tells you that we are at great risk The markets don't generally like that sort of extension. Right, let's apply that now to let's look at the euro yen, because I think this euro yen's got enormous potential. So I've drawn this on. Let me just draw that more accurately, because that's not very accurate. Just want to temporarily stick a... Okay, that's fine. Trend line. Right, so the structure of this weekly chart suggests points to 14,000. We're currently 13.6. So next week, if we come and test the 2017 high at 550, we could ultimately start to run into 14,000, and 14,115 is the 161 extension, which picks up these highs. So notice how that fib picks up that high. That's not any kind of luck. That's exactly why I use the fibs to these levels. Again, the bullish case, if we close under 1550, we could see a decent slide. And we've got a gap here. Markets generally don't like gaps. We have a gap here at... So if the markets get sticky, this is what I'll be looking at. I'm going to leave that on there, because if this starts to sell up here, we get a sell signal here. I would look for that target, 11785. So fascinating chart. That's why I've been looking at that so much this week. It put you to sleep here, didn't it? Because you had this huge box play, which I was talking about. So we could ultimately come all the way back to 450. Yeah, I'm going to leave that box on and come back to 450 and hold. That wouldn't be... I would still be a buyer down here at 450, assuming you got a buy signal. So we could do this. We could... push up into the no man's area, pull back to 400, and still run up to there. So we've had a 1, 2, 3, 4. What we get? There's effectively the breakout. 1, 2, 3, 4, 5. 1, 2, 3. 1, 2, 3. If we get a 4, we may get a 5 into that area here. So this top of that box, I'm going to leave on my weekly chart. It's going to be quite crucial. So this is how I'm picking up these levels now. Bear in mind what I said about relying on technicals, just having a method of looking at these markets and predicting what we can get out of it by using this sort of form of analysis. Okay, let's look at the pound US. I've already put the fibs on 2017. Let's just put the fibs on 2016. Very memorable year for the pound with the Brexit. So that's the Brexit range. So we're still not, we held the 50% of the Brexit range, 2016 range here at 133.80. We're pushing up here. If we put a sell signal here, I think we're going to see 1300 pretty quick. And if that doesn't hold, then we could just fall out of the sky. The chart pattern. That was the major breakthrough busting out of here in November was a major structural breakthrough, so we could still see a push into 13750. So how did that 2016 fibs affect 2017 pound? Because we saw a big push up on the 16th of Jan, started selling into February, and then we had a buy signal here, new low, close above next week on the week beginning 13th of March. That then gave us after we got this wave one here, 2, 3, 4, 5, 1, 2, 3. So we are potentially into a new push up here, which could take us into 138, 140. Let me just put the fib on last year, because that's currently on the Brexit bar. So if I fib last year, right, so we close above 13680, we could see 14120, and ultimately the high of the Brexit, a full recovery of the pound will be 15350. That's all going to depend on, I think it's going to depend on what, on 13670. And we could even, of course, assuming we get a buy signal this week, the sell signal this week, I would short into 135, and then like I said, I think we'll see 130 quite quickly. So that's the score on that one. Euro yen already very close to 2017 highs, so 153.30 is going to be important. Let's have a look at oil. Any questions so far? Any questions? Anybody got any questions? Okay, so let's start looking at gold. 1377 is a major area. Big box play. So in 1382, we're just going to be at the top of the box. So here is the run up from the breakout area of 724. Big trend line move up there. There's the failure. There's the sell signal. There's a sell signal. Currently, we have a test of the 200-day moving average on the weekly chart, and we are heading for 1375. So any pullback, oops, 1350 is going to be tough. Let's see how that works. Let's look at silver. Silver's already right up against that trend line. Look at that. It's just already just about touched it. We close above that, and that I think we'll get another pullback. So I think I have been trading silver. I think the big area for silver is going to be 1650. If we come back and test 1650, I'll be a buyer to see if we can get back to somewhere closer to this massive run up there at 50. So even 22 looks like an option to me. we bust out of here, I think we're going to get from 17 to 22 quite quickly. So silver is a big, interesting market. And I want to show you, not going to carry on too much longer because I don't want to take up too much of your time. Just want to show you the beans. Ooh, yes. These beans have been bopping around. I think we're getting a good signal on the beans. If we, that's the major resistance. So if this three wave, I'd love to see a retest of this. I'm not sure we're going to get it. If we get a buy, if we close higher this week, I will be buying 950 to see if we can come up to 11, and potentially more. I think that's a really attractive chart on the beans. Yeah, we're very close to a major trend line there. Okay, I think I'm going to leave it there, and because I've been talking for about nearly an hour anyway. I will update you. I'm going to keep all this on my charts and update you as the weeks unfold. The weekend videos will have a short period looking at these weekly charts. If you are listening in and in the broadcast and you're not involved in Trade the Easy Way, then drop me a line, because we've got Scalper School program on Saturday. Anybody wants to do a retake that's done Scalper School, then let me know, because you're welcome to a free retake. Scalper School's done well. Well over 250 pips this week. It's done very well. Looking forward to some more big moves. Okay, any questions? Before I finish. Yeah. Any questions at all? Okay, I'm going to get this recording off to everybody. And like I said, for members, I will be pulling you back to this periodically. I'm not going to bore you with it, but periodically I will be pulling you back to these weekly charts and suggesting some key levels that we can look at to really make our 2018 a good one. All right, no questions coming in, so my voice is getting a bit dry, so I'm going to finish up now. And if I don't speak to you again, have a great weekend. I will be doing a lot of work over the weekend to prep for next week, and I'll be thinking about some new events. I'll be thinking about chart patterns and trade plans, all sorts of things. All right, enjoy your weekend, and I will talk to you over the week through the video and the room next week. All right, I will be around tomorrow, but trading very lightly. Okay, bye for now, and try and sort out this room problem as well. Thanks a lot, guys, and I'll see you then.